Right, good morning, everyone. Welcome to another one of our calls. This time today, it's about MTN. As is usual, we'll spend sort of 5-6 minutes going through the thesis, and in this particular case, it's quite a simple thesis for a complicated company. And then we will hand over to Sean to do the technicals on this one. And then, of course, we'll take some Q&A from everyone. So if I go through the thesis, and I'm going to go through it relatively quickly because I think this is a pretty well-known company. We remaining overweight on the company or buy recommendation on MTN, primarily on a valuation basis. This is another one of those difficult companies where in order to have an investment thesis, you've got to believe in mean reversion. This is a company, I was looking at it yesterday, that for the past 15 years has basically gone nowhere if you exclude the dividends. So that either sets it up as a very nice opportunity, or it could continue to be seen as a value trap. So there's a couple of things that we need to see happen in order for it to unlock the value, the undeniable value that we think we see there. The point two you can see in there is not often a company gives you one of their businesses for free. In our mind, MTN Nigeria has been valued at basically nothing in the current share price. So essentially, you're seeing some of the African operations, you've seen South Africa and the fintech business where we believe that there's some good upside driving the value of MTN and MTN Nigeria, basically providing no value on the current share price. So what do we need to see happening? We need to see the continued deleveraging, the mismatch between the dollar debt and the, let's call it the soft currency revenues, rands, naira, Ghanaian cedi, etc. We need to see that change somewhat materially. Obviously, the most recent blow the company faced in the last year or so was the devaluation of the Nigerian naira. Interestingly enough, from our perspective, we think it's one of the most positive things that could have occurred in the last few years, because finally the naira is starting to reflect closer to the reality of what it is actually worth, rather than a pie in the sky valuation, which highlights a risk that you've got coming your way. Fintech business, as we discussed, is positive in our mind. The Forex is an obvious one, given the fact that the soft currencies are driving the earnings. So if you look at the executive summary, growth vectors in place, the key one on Nigeria, which incidentally, as we said, is valued as 0, is that you take the hit in terms of the devaluation of the currency and the margin hit, because there's a number of costs that are essentially dollar denominated. But it takes you a period of time in order to reprice your client prices in order to actually claw those margins back over time. So you take the hit up front, and it takes a couple of years to get that back. It's almost we're in the midst of that problem, and the currencies remains very volatile. So a catalyst for that is evolving rather than a rapid catalyst, and we need to see that over time, which is why our buy is particularly on valuation terms, but we need to see some key execution in order to start getting even more optimistic on what is undeniably a cheap stock. I'm going to go through this quite quickly. Here's a good example. Nigerian service revenue went up in local currency terms, less so in rands, and the rand is by no means a hard currency. This is one of the key issues, is that if you look at this chart, you can see these are all voice businesses, which are very high return businesses, and they moved further and further into the data businesses, which are low return businesses. So key, over time, your operational efficiency and your CapEx efficiency has to become even better in order to get the returns that you can expect from a data heavy business, where data by definition often has very little pricing power over time. So it becomes an efficiency business and a CapEx business. I'm going to jump through the trends. Interestingly enough, when you look at it, the chart, these oranges should be on the right-hand side, simply because of the way the chart is has been put together. So it's not an issue where it was very good data and then dropped off. It's just there's 2023 on the right-hand side. So this is the crux. What are you looking at? You're looking at a share price that has gone nowhere for a long period of time, and indeed has been extremely disappointing for the 1 year basis, down 31%, 2 years down 48%, 3 years down 5% on a compound basis. So it's been a very poor investment over the short term, and over the long term, it's not been a great investment, but you have to go back very far to see the opportunities. So for us, the key issue is that this company is still struggling with a move from a land grab mentality from years and years ago, where you just jumped into a lot of countries. And as we're seeing, they're backing away from some of the more spicy countries because you never actually get a return in them. And you're moving to those ones where there is a real opportunity. That's still work in progress, so we need to see that. We need to see the balance sheet a little bit better, and we need to see repricing in Nigeria post this, let's call it, very weak Naira, which is inflationary for that country. So that is our conclusion. Our conclusion is it looks optically quite cheap. Thanks for that. I don't know who probably a very interesting comment given the share price. But in summary, essentially what you're looking at is you're looking at optically a cheap company. You're looking at a decent balance sheet. And by that, we mean we don't look, we look through the accountings into the economic reality of, yes, the balance sheet's a little bit worse because you look at the leases, the lease liability sits on the balance sheet now. That is not the same as real debt we have got to pay an interest rate on. It is obviously a liability over time, but the accounting of it isn't fully in terms of the economic reality we think about. Demand in South Africa remains okay, and Ghana is fine. You need the repricing of Nigeria. You need to focus on efficiency, and you need to deliver those price hikes and those margins over time. None of these things are going to occur overnight. Your risk, however, is this is the kind of company where, not due to anything it does, but if the emerging markets get looked at a lot more favorably than they have of late, you will get a share price that runs simply because it's got beta to the market. That is a reason why we are quite careful around this company. But from its own self-help scheme, it's going to be a slow grind to get the self-help. Hopefully you get some benefit of the emerging markets because it is so cheap. So that's what makes these kind of companies so difficult, because they're optically very cheap and they could bounce very quickly if the beta to the market tends to show. So I'm going to hand over to Sean to talk about the technicals, which is probably quite interesting to everyone, and then we can take the Q&A.
Yeah, good morning, everybody. Yeah, as Vaughan alluded to now, the share's got a lot of upside potential, but it's also got a lot of resistance. And yeah, so you can see there, this is a chart from Tuesday's close. I see this morning the share price has jumped up. But anyway, looking at the share price, you can see it's trading just below its, just above its 21 and 40-day moving averages, but still far below that 200-day moving average. And obviously, the 21-day must still cross, that's a red line, must cross above that, the 40-day, which is the green one. And both those moving averages have to point upwards before this trend can be called bullish. But in the long term, obviously, the trend is still bearish. As Paul says, long term, it's been down for a long time. In the short term, as you can see there, the share price has rallied off that low, around about that 80 Rand level, and it's holding above that little ascending trend line, which is bullish. And as I said just now, the share price has rallied about 4.42% higher today, or opened up higher, and has broken up above that near-term resistance, or that which is the old or previous support at 91 Rand level. So just above that, you can see the next resistance level will be at 97.50, and then just above that, the 200-day moving average is around about 105. So it's got a lot of resistance levels to go up, and you'll find that the market will pause at those levels. And then in the longer term, you can see the long-term support resistance zone, I call it the zone, is between 114 and 120 Rand levels. And ultimately, the longer-term resistance is between 142 and 145. And we have our intrinsic value for MTN way above that at 150. And as Vaughan says, we have a buy recommendation on it. So yeah, it's got a lot of potential. Yeah, I don't know. I like to add it to my watch list. I like to see things happening first. But you can also see there at the bottom, the MACD indicator is trading just in oversold territory, but it's above its trigger line, which is a bullish signal. And right at the bottom there, the shorter-term stochastic indicator is trading close to overbought territory. I see this morning it is into overbought, but it's not giving any bearish signals yet. So I maybe anticipate a bit of a pullback soon on some profit taking on this little rally before moving up. But yeah, that's how we see MTN at the moment. Thanks, Vaughan.
Thanks, Sean. Nice bit of analysis there. It's this one is definitely one for the people with a bit of risk appetite. Are there any questions? I'll just go and have a look at the chat to see if there's any questions. Thanks, Clive. Yeah. Any questions from anyone else? Actually, pleasantly surprised to see so many people on a let's call it between a public holiday and a weekend. So it's good to see. But yeah, very, very interesting stock, very interesting opportunity, but it's been a bit of a painful process to get here. Right, I think we'll leave it at that point. Thanks, Sean. Thanks, Mandeep, for doing a lot of the work on this. And we look forward to chatting to you guys and ladies next time. Cheerio, everyone.